Hello and welcome to The Bottom Line on TVP World. This is where we unpack some of the main business and economic stories of the day. I'm your host, Marie Cato. President Donald Trump keeps the world on its toes, politically, economically and diplomatically. As we wrap up this week of The Bottom Line, we'll examine the economic impact of Donald Trump's policies on Europe. Before we get into our discussion, let's see the report prepared by Jan Kennedy.
Donald Trump's second term in office was expected to usher a new era for the United States.
From this moment on, America's decline is over.
However, 2 months into the new US administration's rule, the situation is not as rosy. The US's blue chip index, the S&P 500, is down some 5% since the beginning of the year, prompted by a mass sell-off in recent weeks.
They've gone after the long-term structural goals first, which are kind of rebalancing U.S. trade and also trying to get more private dollars into the economy versus government spending. That is very difficult to do. It's going to take a long time. And so that lack of certainty in the market is really kind of paralyzing consumers and businesses.
On the other side of the Atlantic, Europe seems to have benefited from Trump's second term.
Euro has strengthened considerably over the past several weeks, and this is mostly due to the weakness in US dollar and, as a secondary factor, due to the aforementioned expectations of larger spending on military and infrastructure matters in Europe.
Shares of European defence companies have skyrocketed, driven by the EU's massive rearmament effort, in part due to the threat of the US not wanting to underwrite European security anymore. So far this year, London-based BAE Systems has surged by more than 40%. Italian giant Leonardo reported an even bigger near 80% increase, with Germany's Rheinmetall topping the list with a surge of some 125%.
If you look into the future, as already discussed, the European demand for US equipment will likely dwindle as European companies now have the clear time horizon, the clear perspective it is worth raising European capacities. So, in the end, this is indeed much more of a boost to European than to US defense manufacturers.
But it's not only the defense sector that is growing. Germany's upcoming Chancellor Friedrich Merz wants to invest around 500 billion euros in infrastructure.
The biggest impact from everything that we hear on the European economy will come from this infrastructure investments.
In effect, major European stocks have surged as some investors have turned to Europe. Economists, however, advise caution.
Quite frankly, we haven't seen strong macroeconomic data from Europe. So if you compare it to previous episodes, it's quite clear that markets are still, I think, are getting ahead of themselves to some extent.
But there's one word in Trump's vocabulary that he's mentioned more than any other.
Tariffs, tariffs, tariffs. Tariffs, 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 the tariff.
Trump's tariff threats towards the EU have so far materialized into a 25% charge on aluminium and steel imports, primarily affecting its neighbors, but also some EU countries. The US president has warned that more tariffs are coming, which will impact the European economy.
20% tariff on all EU goods is equivalent to a hit of one half of a percentage points to EU GDP. So not something to ignore, but it could be compensated by looser fiscal policy or looser monetary policy.
On the other hand, it's not hard to see where the worst scenario may lead.
What Trump is doing is going to be maybe, in some cases, to the benefit of American producers, less so for American consumers, but is going to damage certain other parts of the world. And if they retaliate, it can become a spiral which is completely negative, as happened in the 1930s when it was associated with the Great Depression.
The coming months will reveal which of those scenarios will play out.
So is Trump disrupting international trade just because he likes tariffs? This week's events have shown us that there must be more to Trump's policies than just telling everyone that tariff is the most beautiful word in the dictionary. Concerns are really escalating. I'm now joined by Dr. Cyrus de Rubia, Chief Economist at Hamburg Commercial Bank. Thank you very much for joining us today. So I wanted to begin by talking about the European stock market response. To what extent are the stock markets telling us what is happening and are giving us an indication of what is coming? We all know that markets are emotional and quick to respond, but they are quick to change as well.
Well, we have this diverging way of the stock markets in the United States going down and in Europe going up very much. The way downwards has obviously very much to do with the uncertainty that we are living in the United States, and the disruption in terms of the institutions, the public institutions, which are attacked by the new administration. And the tariffs obviously have also a direct impact. On the one hand, they have a positive impact on those sectors which are taking advantage of these tariffs, like aluminium and steel sector. But on the other hand, we all know that it has sent prices for aluminium and steel skyrocketing in the United States, and this is a burden for the car industry, for the construction sector, and also, for example, the packaging industry, which is relying on aluminium very much. So this is certainly one explanation or one important explanation why the stock markets in the United States are going so bad. And on the other hand, we have quite a friendly development in Europe, which has to do very much over the last few days with the infrastructure package of Germany, which now is becoming very probable to be decided on next week. 500 billion for infrastructure, more or less limitless spending in terms of military spending. So this is really, really good news for Germany and also for Europe, because the spending will also spread to other countries in Europe. And it is something that we were awaiting very long time, because the infrastructure in Germany has suffered very much over the last 20 years because too less money was invested in the infrastructure. And so the conditions to do business will improve very much due to this package.
Well, this takes me to my next question, because I wanted to ask you, do you think that this rally on defense and construction stocks will last? Because obviously, as you mentioned earlier, if Friedrich Merz's big spending plan fails, I think you think that it will go through. Judging by today's announcement, the Greens will back softening the debt brake. Are stocks going to fall?
It's always difficult to say if how long this will last. I think the economic impact that will be felt very much in 26 and 27. We will see maybe also an impact this year. Maybe growth will be 0.2, 0.3% higher. This is obviously a good news also for stocks. However, the valuations have already increased quite significantly. The price-earning ratio for the DAX companies, for example, is already at 18. It's not as high as in the United States, where it's more or less 28, so much higher, but still it's above long-term average. So I would be not that optimistic that we might see so much more in this respect. But the fundamental impact is certainly very good, because you make the German economy more productive, but it takes time. It will not be a thing that will happen from today to tomorrow, but the whole package is planned for the next 10 years.
Sure.
which brings a lot of planning security to the companies which can take advantage of it, for example, in civil engineering, but also certainly in the car industry when measures are taken to bring energy prices down, the chemical industry, and so on. So I think broadly said, the fundamental effects on the economy will be very, very good over the next years. Stock-wise, we have to see we have already quite high valuations.
Sure. And given where we are right now, are European markets benefiting from the uncertainty that Donald Trump is triggering? And how long might this last with the tariffs kicking in?
No, Europe is certainly not benefiting from the tariffs that Donald Trump has planned.
Just the uncertainty at the moment. Just the uncertainty at the moment.
The uncertainty, okay, yeah, but even the uncertainty issue, there are some, let's say, some people who are hoping for a brain drain out of the United States, for example, of scientists who don't like the environment in the United States and are going to Europe to work here, which is positive for us, but will not do the trick in terms of growth, especially not of short-term growth. But I think that the uncertainty which the United States is spreading is not good for anyone. So this is certainly not the reason why we are doing better than the United States. I think it is triggering more political will to do something here about things that should have been done 10 years ago in terms of military spending, in terms of infrastructure spending, and perhaps also in terms of unity of the European Union, which would be also positive in this sense. But the uncertainty itself is always harmful for business.
Okay, and now just moving on to the European response to tariffs. We know the European tariffs are due to kick in. We hear of the 50% tariffs on American whiskey, a response of 200% tariffs on European alcohol. Is this the way forward? We hear some economists saying that the way forward would be to just stay calm and actually do nothing for now. What are your thoughts on that?
I think that we should go it. I think we should react, and the idea that Europe takes is to show what are the threats in terms of new tariffs, but they can also act in terms of the services which are very important for United States. They are exporting services from the United States to Europe and making much more money than we do otherwise. So it's the other way around here in terms of services compared to goods. So we could, or the European Union and European Commission could do something on this. And I would say they should really show what they can do. But they, at the same time, they say, okay, we will implement those measures only on April, at the beginning of April. So there's room still for negotiations to do. And at the same time, and more fundamentally and more generally, I would recommend very much the European Union to bring forward new trade agreements and to conclude trade agreements which are already planned or almost concluded. Like, for example, the trade agreement with Mercosur. They are also starting to bring forward a trade agreement with India. So I think this is the right way to say, okay, it's too bad that the United States are not in the free trade area anymore. 10% of our goods in Germany are going to the United States. Okay, this means also that 90% are going to other countries. And we should focus on these other countries and regions and have trade agreements with them, and so generate a free trade area, let's say, ex-United States.
So basically, to just focus on developing other trade alliances.
Sorry, I didn't get it.
So basically the EU, Europe in general, should focus on developing other trade alliances outside of the US.
Absolutely, yeah. That wraps it up. That this should be the main focus.
And taking advantage of your expertise, and it might be difficult to answer this question given where we are now and we don't know what might happen next week. What can we expect to see by mid-2025?
Sorry, what
can we expect? What can we expect to see by mid-2025? Given the turmoil in the trade that we see at the moment.
Yeah, well, I'm still, let's say, or let's put it this way: I have a basis scenario for the trade war that is underway, and this trade war, in my view, in the base case scenario is, okay, the Trump administration implements its tariffs, we retaliate, but beyond that, we won't see an escalation, a sustained escalation. And so we will have less trade. This is the perspective, yes, but it would not be an event or a development like we have seen in the 1930s with the Smoot-Hawley Tariff Act, which brought down exports by around 60%. So this catastrophe I do not expect. I do expect less trade, and it will be harmful for German exporters, but I'm also confident that the new tax and fiscal package that is underway, or is most probably being underway then, will overcompensate for this damage.
Okay, so following on from what you've just shared, the reality of these tariffs is kicking in. So how will this impact regular EU citizens from here onwards?
Well, it might even have some positive effects. Take, for example, the tariffs on steel and aluminium, which means that countries like Brazil, China, South Korea, Japan, who usually export parts of their production to the United States, are now moving more of these goods to Europe. And this means that the price for steel and aluminium should not increase, but instead even go down, which would make the production of cars, for example, more affordable. So this could be a good outcome of the whole issue. And on the other hand, we will have some retaliation. So some goods of the United States will be more expensive here as a result. One other track where we should look at is obviously the currency. Euro at first instance has depreciated quite a lot, which was inflationary. But now with this package that is underway, or the fiscal package which is promised, that has reversed. So I am inclined to see a rather stable euro, which will be hovering around 110, which is good for consumers and compensates a bit for the damage that has been done before.
Okay, and just as we wrap up, how probable is it that we will see a recession kicking in the US? And if so, how soon? How might it affect Europe?
Yeah, that's the big question. And if you look only at economic indicators, you have the ISM for services, which went up again. You have the ISM for manufacturing, which is not very high, but still in growth territory after being in negative territory last year. So these are rather good news, let's say. But on the other hand, you have consumption, which is not doing so well. But this is a look in the rear mirror, so it's not as useful. And the real point where you have to look at is this uncertainty issue, is this tariff issue. And I think that the effects of the tariffs, but also of migration, of mass deportation, is doing quite harm to the US economy. I would not I'm still not expecting a recession, though probability has increased, but I would rather expect growth which is much lower than last year. Last year we had 2.5%. I'm at 1.5 at the moment, but inclined to go somewhat weaker on that.
Okay, Dr. de la Rubia, thank you so much for joining us.
Thank you.
And we were joined by Dr. Cyrus de la Rubia, Chief Economist at Hamburg Commercial Bank. Thanks for watching. I was your host, Marie Cato. Join us every weekday afternoon for The Bottom Line at 5:10 CET on TVP World. And for the latest in regional business, follow us on X and on tvpworld.com. And for more news and analysis, stay with us on TVP World. Goodbye.